Hi, welcome back to uncoverfraud.com. My name is David Melamed, and I'm a forensic accountant and fraud investigation expert. And what I want to tell you about today, and it really is a rant, it is the issue of public company audits and what the investor believes that the audit accomplishes and what an audit actually accomplishes. And where I want to focus in here is not just on error, but on fraud. You know that audits, financial statement audits, external audits account for only 3% of frauds being identified, according to the Association of Certified Fraud Examiners. That's 3%. If you ask the average investor what they think, their number is significantly higher. Just to put it into perspective, a tip or whistleblower program identified over 50% of frauds, occupational frauds. So what is it that we can do as accountants, as CPAs in Canada, in the US, in the world, to either increase the standard of audit or to bridge that expectation gap with the investor? Look, I believe we can do a bit of both. I think to bridge the expectation gap, we need to explain to investors what the financial audit accomplishes and what it doesn't. Simpler and more detail. Have a question, have a town hall, what it is that they need. But the second thing is you need to demand as a public investor that you want a forensic accountant and fraud investigation expert as part of the audit team as a must, not as a maybe, when the audit partner suddenly decides it's time to bring in the experts. Now, I'm not saying that a fraud investigator or forensic accountant is going to identify all frauds. What I am going to say to you is that they're going to minimize fraud exposure. They're going to identify some of the frauds earlier, and they're going to reduce the risk for the accounting firm itself. Because remember, when a company, a public company, is suddenly accused of fraud, there is a 180-degree turn that happens where they are looking right at the accounting firms. What were they doing or what were they not doing that this fraud was not uncovered? You know, if I have to use an example, Wirecard, where that $2 billion supposedly was in the Philippines, and it took Ernst & Young 3 to 4 years to identify the fraud. Now, when they identified it, they wouldn't sign off on the financial statements. But something like cash that gets reconciled, a junior usually is assigned to that cash section of the audit. And if procedures aren't followed properly, then it is easy to miss. And if it's intentional, it's even easier to mislead and misguide the junior. Maybe one of the things that I could suggest going forward is a junior's working with a more experienced manager. And it's not just oversight of follow what we did in the previous years. It's actually spending the time with the junior, explaining to them what it is and why it is that they're doing these audit procedures and what would be an anomaly, what would be unusual. Arming your juniors, especially if they're going to focus on cash in an audit, is a must, not a maybe. My name is David Melamed, and I'm a forensic accountant and fraud investigation expert. To find out more about me and the services we offer, please visit uncoverfraud.com. Thank you. Please don't forget to subscribe below and leave me some likes. Until next time, God bless.